It's time for your Low Country real estate market update. It's the Brian Beatty Real Estate Show. Brian is one of the top 1% real estate agents in Charleston. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. Now, broadcasting from the WTMA studios, here's your host, Brian Beatty.
Good morning, Charleston. You're listening to the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. I'm your host, Brian Beatty. Thanks for tuning in. I'm joined in the studio today by Andrew Muller of Mappus Insurance and Bill Sandvig of Movement Mortgage. Good morning, guys.
Good morning, Brian. Thanks for having us on the show again.
Good morning.
It's been a while since we've done this, so glad to have you guys in the studio. We're going to talk about all things real estate this morning. If it's your first time tuning in, this is where you go to get informed with regard to real estate, up-to-date information, experience from us as some of the top agents and producers in our field, so that if you're thinking about buying, selling, or investing in real estate, you can do so with some information that you can rely on and some realistic expectations. If at any point in time you'd like to reach out to me personally, you're thinking about buying, selling, or investing in real estate, feel free to give me a call. My number is 843-345-1273, or you can go to my website, listingsincharleston.com. And on that website, you can learn more about what I do to sell my homes, learn more about me as a person that's been in this business for about 10 years, been in the top 1% of agents since 2009. And if you're thinking about selling your house, click on the Sell Your Home tab. You can learn more about what I do to market my properties for sale. And you can also learn more about my 59-day home sale guarantee. So that's listingsincharleston.com. Now, we are live in the studio today. If you have any questions, comments, concerns, a story you want to share, feel free to call into the studio. Our number here is 843-556-1250, 556-1250. So let me tell you what I want to talk about today. I want to talk about hurricane season first. I want to get some information on the table with regard to understanding your deductible. And Andrew, I'd like for you to help us with that. I want to also talk about the first-time home buyer market. I want to focus for a little while on millennials. And then a little bit later on in the program, I want to talk about selling your property if you have a tenant in place and some things that you can do to try and make your home look a little bit more expensive. So I'm going to start with you, Andrew. Obviously, we're about halfway through hurricane season. So we had a little bit of a close scare here a little while ago, but we were talking earlier about understanding your deductible for different types of insurance coverage. So thought maybe you could just touch on that for a little while this morning and help people understand what they're really getting themselves into when they start to search for policies for insurance.
Absolutely. So yes, hurricane season is from June 1st through the end of November, but that doesn't mean a storm can't come up at the other times throughout the year. So it is important to understand how your policy will respond, whether it's a hurricane, a tornado, or just a bad thunderstorm that rolls through over the weekend. And so, as you mentioned earlier, we were talking about all the various deductibles that you need to look for on your policy and understand how your policy is going to respond after all of these various events. We were joking around a little bit earlier how the three of us, we each have a different type of wind or hurricane deductible on our homeowners policies.
Yeah, this was very interesting.
And I know this just because I write all three of the policies. Otherwise, I wouldn't know that. So my homeowners policy has a wind and hail deductible. And what that means is that any type of wind and hail claim falls underneath that percentage deductible. And for my policy, it's a 1% wind and hail deductible. And that percentage is not of the loss. So if you have a $20,000 loss, it's not 1% of $20,000. It is 1% of the replacement cost of your home. So if you have a $500,000 replacement cost on your insurance policy, 1% of that would be $5,000.
Right.
So you would have a $5,000 wind and hail deductible for any type of wind and hail claim. That could include a tornado, a tropical storm, or a hurricane. Any type of wind claim, that percentage deductible will apply. Now, Brian, on your homeowner's policy, you have a hurricane deductible. It's a 2% hurricane deductible. So that 2% again, applies to the replacement cost, but it only applies to a hurricane. So if a tornado comes through and destroys your home or ruins your roof, well, it wasn't
screwed.
It wasn't a hurricane, so you default to your other deductible on your policy, which for most people is either $1,000 or $2,500. But if you have a $500,000 replacement cost on your home and you have a 2% hurricane deductible, that's a $10,000 deductible.
Right.
So if it's not a hurricane, it's not a $10,000 deductible you're dealing with. It might only be $1,000. So it's really important to understand, what are you responsible for? Am I responsible for $1,000 or $10,000? Because you might want to know that.
So having only the hurricane deductible is actually being more insured, because it'd be less likely for you to have a named storm hurricane come in rather than maybe a tropical storm causing damage.
Well, the actual insurance coverage, you're not more insured, but it's less likely that your percentage deductible is going to apply. Because if you have a hurricane deductible, only a hurricane falls underneath it. So for me, any storm that comes through, because I have a wind and hail deductible, I know that percentage could apply to any type of storm, but it would apply to a hurricane or a regular wind and hail storm.
Why do insurance companies do that? Why not just protect your house? Why do they separate it, from hurricane deductible to wind and hail deductible? Is it,
They all just have different underwriting philosophies and how they want to, charge their premiums. There's not necessarily an advantage or disadvantage to one or the other. It just is what it is with each individual company, and you just need to understand how your policy responds. Certainly, I would say in general, a hurricane deductible is better, but it might cost you a little bit more in premium because you're putting less risk on the line for you and what you're going to pay out of pocket. So it just depends on what you're willing to spend in premium and what risk you're willing to take on individually.
Right. Okay.
Right. And that brings me to another question. We're talking with Andrew Muller of Mappus Insurance. Talk to me a little bit about earthquake coverage, because that's something that comes up fairly often when you're quoting a policy. Mm-hmm. But Bill, correct me if I'm mistaken, but earthquake coverage is not required by a lender in order to get a mortgage, correct?
It's not required, correct.
Yeah. I always just find that very strange that lenders, I'm not putting lenders down, but they are so focused on the wind and hail coverage portion and the flood portion, making sure they're just adamant that you have to have that. But here in the Low Country, we sit at a moderate to, I wouldn't say high risk for earthquakes, but Somerville sits on a fault, and they have little tremors all the time. And if we all Google, the Charleston earthquake of 1886, you'll see that the city was destroyed by an earthquake. And lenders aren't requiring it, but that is I think a significant risk that could damage a home significantly, potentially destroy it if a earthquake were to occur. But lenders never require it. And so a lot of times homeowners, they say, well, if my lender doesn't require it, I don't want it, because they don't want to pay for it, which I completely understand. But they also need to be aware that it's not covered under your homeowner's policy if you don't take that endorsement.
And I'll have to acknowledge a little bit of a knowledge gap here. I don't know if that's different on, say, the West Coast, where hurricanes are less likely, but earthquakes are more likely, and lenders are going to change those underwriting requirements for the house.
I think you're right. Yeah. Out in California, a lot of lenders do require it. I did read a statistic, though. You would think in California everyone would want earthquake insurance, but I read that only 12% of homeowners actually carry it. But I think partially because it's so expensive that they say we're just going to self-insure.
Yeah. Wow. Again, we're talking with Andrew Muller of the Mappus Insurance, and this is the Brian Beatty Real Estate Show. Now, if you guys have any questions, you're following along, and you have some insurance-related questions, feel free to give us a call here in the studio, 843-556-1250. So, Andrew, one more question for me. Any sort of updates on flood insurance? I mean, obviously, a year or 2 years ago, we were going through the whole Biggert Waters Act scare, and flood insurance policy premiums were jumping up to tens of thousands of dollars. Anything new going on with flood insurance that we should know about?
Nothing really new since this past April. But what a lot of homeowners are seeing now, they're getting some paper in the mail from FEMA stating you need to sign this form and letting us know whether this is your primary or non-primary home and if you live here over 50% of the year. And it's very important that you sign that because as of April 1st of this year, there's a new fee that FEMA is charging. It's $25 if it's your primary home, and it's $250 if it's a non-primary home. And so a lot of people are trashing this paper thinking they don't need to sign it, and then they get their flood renewal in the mail, and it doubled. It went from $500 to maybe $800-900, and they're wondering why. It's because they didn't sign the form. We can get that reversed, and you just need to sign the form, and we'll submit it for you. But that's something that you need to look out for. So that's something that's changed since April. In terms of rates and everything, nothing has changed. There's still a lot of misconceptions out there in terms of everyone thinks that every flood policy is going up by 15% every year. And that's only for people that have subsidized policies. And the subsidized policies, again, are for homes built before 1974. So,
right. Yeah.
Gotcha.
And now the policy premiums are going up quicker or more dramatically for second homes and investment properties if they are pre-firm homes. Is that the case?
Yes, they're going up as well for them.
Yeah,
absolutely. And they're getting tacked with that $250 fee. So they're seeing some like a double whammy there. So if it's a rental property that you own and it's older and it's not being rated with an elevation certificate, you could be seeing some major increases.
Yeah, I think the biggest takeaway for home buyers with that knowledge is get a elevation certificate when you buy a house.
Yeah.
And then ask your insurance agent, what is my potential for my rate to be? Because you want to know, well, this is what it is now, but hey, 1, 2, 5, 10 years from now, as it continues to approach those non-subsidized rates, what is my policy going to look like?
Yeah.
Because it's going to keep changing. And so you want to know, hey, is it going to go up to $4,000, $5,000 a year in 10 years? Is it slowly creeping up? And so that's knowledge you want to have. Yeah. And so talking to your real estate agent, talking to your insurance agent are important things when you're going to make that acquisition.
Yeah,
absolutely. Well, we're going to take a quick break. When we come back, we're going to continue this discussion. We're also going to talk about first-time home buyers. We're going to talk about some credit repair, some things you can do to establish credit. All that with Bill Sandvig of Movement Mortgage. And we'll have a few more things with Andrew Muller of Mappus Insurance, so stick around. And again, if you have any questions, feel free to call into the studio, 843-556-1250. This is the Brian Beatty Real Estate Show. We'll be right back.
Have a real estate question? Ask Brian Beatty. Send him an email, lowcountryhomesales@gmail.com. The Brian Beatty Real Estate Show is on 1250 WTMA. WTMA. Expert news and views on the Lowcountry real estate scene. The Brian Beatty Real Estate Show on 1250 WTMA.
Welcome back, Charleston, and thanks again for tuning in to the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. We were just talking with Andrew Muller of Mappus Insurance. He gave us a lot of really good things to think about with regard to your deductible, understanding your deductible, what it pays for, how it applies to you. And Andrew, I didn't get your contact information before we took a break, and I apologize about that. So please tell anybody that's listening how they can get in contact with you for any of their insurance needs.
Absolutely. So you can obviously call our office at 763-4200, or you can also go to our website, Mappus, MAPPUS, insurance.com. And we have a lot of really good blog posts on there as well, talking about various deductibles and other coverage issues that might be important to you. So if you check those out, you might learn a few things or two.
Excellent. And again, if you're thinking about buying, selling, or investing in real estate, I invite you to give me a call personally, somebody that's been in the top 1% of agents here since 2009. I can be reached at 843-345-1273. That's 345-1273. Or you can go to my website, listingsincharleston.com. You can learn more about what I do to sell my homes. And you can also learn more about my 59-day home sale guarantee, which very simply states that I'll sell your house in 2 months or less, where I'll sell it for half my commission. So listingsincharleston.com is the website to go to for that. And if you have any questions, feel free to call into the studio. The number here is 843-556-1250, 556-1250. So, Bill, I want to shift over to you, and I want to talk about first-time home buyers. I want to talk about the millennial market, the group of people that represent the largest demographic in our nation. 33% of the population, I believe, is the millennials. So, excuse me, I want to focus on first-time home buyers. I want to talk a little bit about establishing credit, maybe repairing credit. I want to know how student loans and debt play into all of this. So I'm just going to turn it over to you. And if you're listening and if you have questions, you're thinking about buying your first or second house, feel free to call in. We're here to help. 843-556-1250. Bill Sandvig of Movement Mortgage, take it away.
Yeah, thanks, Brian. So if you're out there listening and maybe you've got a child or a grandchild or you're out there and you're in this millennial market, it's the largest emerging market in the nation. And Movement, just by chance, we actually do about 40% of all of our mortgages done are in this millennial category right now. And the first-time home buyer market is very, very strong, and it's growing because right now the housing affordability is still very, very strong. You can get into a house at a very, very low interest rate. Housing prices are going up across the country, but they're still reasonable. We're still in a very, very affordable place in the real estate market. So if you're out there and you have a family member or you're thinking about becoming a first-time home buyer, my first piece of advice is this: reach out to an expert early. Reach out early. Reach out when you start, not when you're like a month away from your lease expiring on your rent, or you're thinking about moving in 30 to 60 days. The time to start planning is 6 months out. I mean, maybe even a year out, because the more time that you give to an expert like Brian or an expert like myself for us to plan for your move, the more time you give us, the more options you are going to have. I do not want to have that call and say, hey, I need to move into my house in 3 weeks, because we might have no options. You might have something on your credit report when we pull that credit that you didn't know about, that is there holding your credit score down. You think you've got perfect credit, but there's a medical bill that's hanging out there that you haven't paid, or there's some late that wasn't even your fault, and now we don't have time to react to it, and you're limited in your mortgage options, and you're going to cost yourself or your family money because of it. So my first piece of advice is to reach out to an expert early. If you ever have any questions for me, you can always reach out to me directly. My number is 843-300-7870. You can find me on my website at www.lowcountrylending.com and fill out a free buying power evaluation so that the team can get together and we can help you plan ahead. Now, when we talk about credit, people, it's a very common thing. Every single day I have an application where someone comes in and their credit isn't where it needs to be. And there's a lot of misconception out there about credit. When you're ranking credit, it doesn't go, good credit's obviously the best. If you have good credit, a high credit score, that's the best you can have. But the confusion is that it's better to have bad credit than it is to have no credit. And people confuse that, because bad credit actually has a score. We can actually focus on a few things to fix that score relatively quickly. But if you have absolutely no credit is not good. Mortgage companies do not want to be the first piece of credit that you've ever had. They don't want their risk to be first. And so they want to see an established history. And there's actually mortgage guidelines that require for you to carry a certain number of trade lines for a certain length of time. For example, a conventional loan, which is the best type of loan. If you're going to put 20% down on a house and avoid mortgage insurance, a conventional loan with good credit is going to give you the very best cost for your house. And a conventional loan requires for you to have at least 3 trade lines for at least 12 months. So we got to have those trade lines established, which means if you're a millennial, maybe just getting out of college, you don't have that credit history. So if you're out there listening, I'm going to coach you through what I'm going to be doing with my daughter. My oldest daughter is a freshman in the College of Charleston. She's going to be turning 18 here shortly. And she already knows that on her 18th birthday, happy birthday, we're going to go down to the bank and we're going to get you 2 credit cards. Happy birthday, right? And she has no credit, so we might have to open up a secured credit card, and we're actually going to open up 2 of them. So if you're out there, a secured credit card works this way. If you don't have any credit history or bad credit history, people don't realize that 70% of your credit score is actually based on positive credit. So you could have a laundry list of collections and bad debt from years ago, but if you have new, good credit, it way outweighs all those collections in your past. So establishing new, good credit is very, very important. The way you can do this, even if your score is exceptionally low, is a secured credit card. Take $200 cash, go lay it down with a bank like Capital One or Wells Fargo, anybody. Just go down, take $200, and they're going to give you a $200 credit line that you're basically securing with actually liquid funds. I recommend you go out and do 2 of these. And here's how you use these new secured cards. And this is what my daughter will do. She'll have a blue card and a red card. And I'm going to say, Sarah, once a month, you're going to go and you're going to fill up your gas tank with this blue card. And you're not going to do anything more than that because I never want the balance of your card to go above 25% of your limit, ever. Because we want to show that you have available credit. The credit companies want to see not that you have credit, but that you're actually using credit responsibly. So she'll go out and she's going to charge 1 tank of gas, just like she was using cash. The very next day, she's going to pay that card down to $10, not pay it off. This is a common misconception because if you have 3 credit cards that all have 0 balances, the credit agencies are going to look at those balances and say, oh, they have a credit card, but they're not using it. They're all 0 balances. They're just sitting there not being used. So that's not showing responsible use of credit. So we want to have a little tiny $10 balance. So the credit card company says, look, no late payments. They're using their card and they've got the maximum amount of available credit to them. So if it's even only a $200 limit, if you're showing a $10 balance when that credit reports, you've got 95% available credit. So it's the strongest. You have a question?
I've got a question.
Yeah.
So let's say somebody goes out and does all this. How long does it take for it to actually impact their credit?
So it's going to impact it very quickly. So actually in the first 30 days of reporting, they're going to establish a score. And every time that that credit card reports, it's going to keep going up and up and up. So I'm gonna answer that question, but I'm gonna finish my story.
Okay.
So Sarah's gonna have the blue card and the red card. Okay. So 1 week it's the blue card for a tank of gas, and then pay it down to $10. The next week it's the red card for a tank of gas, pay it down to $10. She's gonna do this every month. She's not spending more money than she's used to, but she's establishing a credit history. The next thing we're gonna do on her birthday is she is spoiled enough that we bought her a car, and so she has the car. We're going to go get her a car loan. So, and the car's paid off. We're going to transfer the title into her name when she's 18, and we're going to get her this nice, tiny little $2,000 car loan at probably a 15% interest rate because it's going to be only in her name, and it's going to be a 4-year loan with a tiny little $25 payment. I mean, nothing. But now she has a car loan, 2 credit cards, and this $25 car payment that she's going to make is going to be no problem. I'm going to set it up on automatic draft, and every month she's going to have these 3 trade lines reporting. By the time she's 18 and a half, her credit score will be over 700. By the time she's 18 and a half, she'll have well over a 700 credit score, approaching an 800 credit score, which is, as a 19-year-old,
right,
is ridiculous.
Right.
Okay? But she's only going to have perfect credit reporting, and the score goes up so fast. And so we can do this with someone that has no credit, obviously. It's easy to establish a really positive score with very, very manageable monthly payments. But even if you have poor credit, this can have the same impact. We can get that credit score rising to a level that would allow for you to buy a house and open the door to different loan options. Mm-hmm. We don't want to have to put you in this one loan product because you have a very marginal credit score. You have to put this much money down. These are your only options to get in. We want to be able to present you with options because the more options we can present you with, the more we can plan for it, the more money we can save your family. And so it goes back to that first piece of advice, which is reach out to local experts. Reach out to local experts as early as you can, so we can plan and coach and work with you to get you in a spot to be able to make that purchase.
Excellent.
Wow.
There you go. That's how to establish credit, folks. I hope y'all tuned in for all of that. If for whatever reason you're just joining us, we're talking with Bill Sandvig of Movement Mortgage. Bill, how can people reach you again if they have any credit-related questions or they want to buy a home, get a mortgage, refinance, anything of that nature?
Sure. If you're out there and you're real curious and you want to see my face, then go to www.lowcountrylending.com. I've got a free buying power evaluation link on there. Once you fill that application out, within 3 hours, my team is going to jump on it, and you're going to have an answer to what you're able to buy, what your payment's going to look like, and what loan options are available to you. Also, my cell phone, 24/7. Don't tell my wife I said that because she doesn't like the 24/7 answer. But if you want to call me, I'll answer if I can. 843-300-7870.
Perfect. We're going to take another break, and when we come back, I want to talk a little bit more about first-time home buyers. I want to talk about maybe some challenges to getting them from renting to buying, some things that I'm seeing on the horizon, and of course, some positive news in that regard. All that and more as the Brian Beatty Real Estate Show continues here on the Big Talker, 1250 WTMA.
Find Brian Beatty online at listingsincharleston.com. The Brian Beatty Real Estate Show continues next on the Big Talker, 1250 WTMA. 1250 WTMA. Now, here's more of the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA.
Welcome back, Charleston, and thanks again for tuning in to the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. I always like to take a little bit of time and just say thank you very much for those of you that tune in and listen to this show as a resource for learning more about the real estate market. So if you're thinking about buying, selling, investing in real estate, or if you just like to stay informed in what's going on in our market, I invite you to give me a call personally. My number is 843-345-1273, or you can go to my website, listingsincharleston.com, and on that website you can learn more about what I do to sell my homes. You can search the MLS. And if you're thinking about selling, click on the Sell Your Home tab. You can learn more about my 59-day home sale guarantee at 4.5% commission. I still have Andrew Muller and Bill Sandvig here in the studio with me. Andrew Muller's with Mappus Insurance Agency, and Bill Sandvig is with Movement Mortgage. You just gave us a great segment on establishing credit, telling us a story about how he's going to, for his daughter's 18th birthday, give her debt. Mm-hmm. But it's going to help her buy a house. And so some very informative things there. If you have any questions, anything you'd like to discuss with us, panel of experts, feel free to call us in the studio. 843-556-1250 is the number here. 843-556-1250. Now, I wanted to talk a little bit more about the first-time homebuyer segment of our market because it's where I find the greatest opportunity. If you look at just the population of our nation, 33% of our population are millennials. Late teens to early 30s. There's 83 million of them. They have now outpaced baby boomers. 75 million in our nation are baby boomers. So if you look at the opportunity that first-time home buyers have right now, it is tremendous. Fairly low pricing still, low interest rates, very little debt. You're not at the point yet where you've got large families and you're paying for college. You have all these miscellaneous expenses and savings. It's an excellent time for you to consider buying a house. You pay down the mortgage balance, the value of your real estate increases, and if you get really aggressive about it and you start buying some rental properties, I mean, if you're 30 years old and you buy a rental property a year or every 2 years, by the time you're 45, you're living off that rental income.
That's right. I'm going to use that as a segue. I think one of the coolest opportunities out there, and before I even go there, I think one of the biggest travesties is that parents don't have the credit conversation with their kids. I mean, I remember when I graduated from college, I had no established credit, and I was thinking, all right, here I am, a young adult, I've got a steady job, but if I don't pay my DirecTV bill, they're going to turn off DirecTV. I can't watch a football game, but my credit card, that can wait until 2 months because I can just double pay that one next month.
Yeah.
And I had no clue on the significance of that. And there's so few people that are having that conversation. When you do plan ahead and you talk to experts like Brian and talk to experts like Andrew, when you plan ahead, there are so many awesome things that you can do. Talk to your kids about credit, help them establish their credit. For example, talking about rental properties, multi-unit homes are an amazing opportunity for the millennial.
Absolutely. That's how I got started with regard to real estate investments. I bought a triplex and I bought a duplex and a few other things, but those provide me with fantastic rental income. But I bought them at prices that were a few years ago, so they're even better than I think what you can get now in many cases. But it's an incredibly great tool for wealth at an early age.
An amazing opportunity, because you can actually move into one of those units as a millennial. Say, well, are you going to move into an apartment complex or maybe buy a 4-unit property? Mm-hmm. You buy a 4-unit property, move into it as a primary residence. You've got 3 rentals, and the amount of money you need to put down, 3.5%, 3% to move into a primary residence. You could find a $400,000 place, and don't buy your kids a car for graduation from college. Give them $12,000 and buy them a 4-unit property where they've got residual income coming in for the rest of their lives. You know, amazing opportunities.
Mm-hmm. Yeah, and that's interesting because looking at some statistics before our show this morning, about 25% of millennials receive gift funds for down payment. Mm-hmm. Which, there's one more thing that I want to talk about too, and that's the issue or the battle really of getting from renting to owning and disciplining yourself enough, quite frankly, to save the money for the down payment and the closing costs and some of the expenses associated with home ownership, because we've got a few things that I think are challenging for people that are just making the right amount of money to start buying.
Right.
But you've got, number one, you've got raising rents. Mm-hmm. If you look at rent across the board, it's risen 7% nationally, 5% here in the Charleston area. Some areas more so than others, obviously, but you've got the issue of rising rent. If you look at I was looking at a study that said that 30% of tenants' income goes directly toward their lease. From there, they've got 60, 70% based on the amount that they're making to pay for bills and groceries and savings associated with the down payment. We've got the issue of rising rents. Then the second thing is student debt. If you look at student debt in 2003, we had a little over $200 million nationally. Mm-hmm. It's over $1 trillion now. Mm-hmm. So, Bill, how are you seeing that play into first-time homebuyers when they go to purchase a property?
Yeah, so that's a really good question. And to answer the question, I want to talk about the impact of payments compared to how much house you can buy. So for every $25, quick rule of thumb, every $25 in payment is about $5,000 in house price. So if you've got $50,000 of student debt, which has got a $500 payment associated with it or a $400 payment, we're talking about $50,000 to $100,000. That's actually quick math. $100,000 of house buying capability chewed up by that student debt. So if you didn't have that debt, you'd be able to afford $100,000 more home, but you can't because of that student debt. So, I mean, that's a dramatic impact in your ability to buy a house.
Right. One other quick question for you. When we talk about first-time home buyers that may just be entering the workforce, let's say they get a good first initial job, they're making $50,000, $60,000 a year. Mm-hmm. How long do they have to have established W-2 income in order to qualify for various mortgage types?
So base salary, it counts immediately. The second they have that job for a full-time job, base salary counts immediately. If they have commission, bonuses, overtime, things like that, we have to have a history, at least a year. The standard is 2-year history, but we can get an exception for it to count it after 1 year. But as soon as they have that job, the base salary starts day one. And so you can graduate from college, get a job, making $30,000 base. And if you've planned ahead and been smart and you have relatively low debts, you're easily qualifying for a $250,000 house today.
Excellent.
Wow.
We're going to take another break, and when we come back, I want to give you some strategies for either buying or selling properties with tenants already in place. Bill, I'm going to ask you a few questions. Andrew, you as well. Mm-hmm. If you have questions, you're tuning in, and we've got about 15 minutes left in the show, so this is your opportunity to call in with your questions, your story, your experience. The number here is 843-556-1250. This is the Brian Beatty Real Estate Show. We'll take a quick break, and we'll be right back.
Stay tuned for more of the Brian Beatty Real Estate Show on 1250 WTMA and WTMA.com. WTMA. You're listening to the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA and WTMA.com.
Welcome back, Charleston, and thanks again for tuning in to the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. I'm your host, Brian Beatty, and we've had a lot of really, really good information shared this morning. I've got Andrew Muller with Mappus Insurance in here with me, and I've got Bill Sandvig of Movement Mortgage Insurance, Bill Sandvig with Movement Mortgage in here with us. And we've had a lot of really good stories shared and some very specific information that I think you can take away if you're thinking about buying, selling, just general knowledge with regard to establishing credit, understanding your insurance deductible, so on and so forth. So if you want to reach out to any of us, I'm just going to go around the table really quickly, provide contact information. Then I want to share one more quick story and give you some information on that. But I'm Brian Beatty, host of the show, top 1% of the agents here in Charleston since 2009, sell over 100 homes a year. You want to contact me, you're thinking about buying, selling, or investing in real estate, you can call me at 843-345-1273, or you can go to my website, listingsincharleston.com, learn more about me, my company, what we do to sell homes. And you can also learn more about my 59-day home sale guarantee, which states I'll sell your home in less than 2 months or I'll sell it for half my commission. Andrew, how can people reach you?
Absolutely. They can reach me at 843-763-4200. That is the Mappus office number. You can also go to our website, mappusinsurance.com, and you can email us through there, or you can also email me at andrew@mappusinsurance.com.
Bill?
Yeah, so my website, www.lowcountrylending.com, and you can reach me directly at 843-300-7870.
Cool. Thanks, guys. And I really appreciate your contribution to this morning's show. You've shared a lot of really great information. All right, so let me tell you a quick story, and this is something that I'm running into a lot right now as a real estate agent that helps a lot of people move and buy homes. They bought a house a few years ago, and in some instances, the price has raised enough to where they can afford to sell the property, pay commissions, pay closing costs, make a little money, and then move on, either to another area in Charleston or moving out of state. But I'm also getting a lot of people that have purchased in the past year or two. Prices have not risen enough in order for them to pay the commission and closing costs and sell their home and break even. So they're choosing to rent their property out and then move to a different area. So I want to talk about how to take advantage of buying a property when it's rented, what you need to know, and then the same thing applies when you're selling a property, what you need to know. But my first question is for you, Andrew. If I'm a homeowner and I decide that I can't sell my house for enough money to pay the commissions and closing costs and then move somewhere else, and I decide to rent my property out, what do I need to know from an insurance standpoint?
That's a great question. You initially need to call your insurance agent and change your policy immediately, because a standard homeowner's policy is meant for the owner to reside in that property. If you move out and you rent the property out, then you are playing with fire. If you have a claim at that property, you most likely will not see that claim being paid, because the definitions within the policies state that, you're the owner, you need to live here. If you don't live here, then there's no coverage. And so you need to get on what's called most likely a dwelling fire policy, which is a renter's policy that protects you as the owner of that property, but where you're renting it out.
What kind of increase in premium would you see typically?
That's a tough question. I always say around 10% more in premium. There's certainly a higher risk when renters are living in a house because they don't own it. So from an insurance perspective, they think that they're probably not going to take as good of care of it as if they owned it. So I say about 10%, but I've seen it where we've actually seen decreases, because sometimes you don't need all the coverage for personal property in there that might add up on your regular homeowner's policies.
And what about liability coverage? How does that change at all?
Absolutely.
If at all.
Well, you absolutely want to have the liability coverage on your renter's policy. Another thing you want to think about is getting excess liability coverage, because when you do rent a property out, you're increasing your risk of something happening not only at your primary home but at your rental property. So you want to look into getting what's called an umbrella policy that can sit over your primary home and any rental properties you own, as well as your auto. And if you own a boat, you can make this excess liability sit over all your exposures for extra protection.
Yeah.
Perfect. So let's say that you're selling a property and you already have a tenant in place. I'm going to give you just a few tips and things that you need to know when you're selling your property. Now, I want to talk first about, let's say that you own a property on the Isle of Palms or Folly Beach, and you rent that out on a consistent basis for rental income. The first thing that you need to know as an owner of that property is something called the South Carolina Vacation Rental Act. And the South Carolina Vacation Rental Act very simply says this: any sort of management agreement or tenant agreement that was signed at any point in the past needs to be honored for 90 days after you sell the property. So if you have a bunch of rental income lined up, both the property manager and those tenants have a right to the property for 90 days after closing. One of the issues that we run into sometimes when we're looking at properties for buyers on Isle of Palms is that they want to buy something and they want to move in immediately. Well, if there are tenants in place over the next 90 days, then clearly that can't happen. The only way for them to do that would be for the property manager to proactively reroute those tenants. But you as the owner need to understand that they're doing that and sacrificing their own income based off of the management fee they would earn for creating it, if that makes any sense. Yeah. So now if you're a seller and let's just say that you own a home in a neighborhood and it's tenant occupied, the first thing that you need to do is understand that you need to tread very lightly with that tenant. I sell a lot of real estate with tenants in place, and having a good, positive, open line of communication between the tenant and you and your agent is incredibly important, because the tenant really is the person that is responsible for the way your property appears to the public when buyers go and see it. If you have a tenant that's disgruntled and the tenant that does not want to cooperate with you when you're selling your property, which most of the time is the case. I mean, tenants aren't really thrilled to, stage their property and pick up everything and someone
else has made a decision that they have to move.
Exactly.
Yeah.
So most of the time they're actually fairly difficult to work with, but you can combat that by maybe offering them a little bit of a reduction in their monthly rent. Say, hey, look, I know that this wasn't the plan when you signed your lease. I've decided to sell the property for personal reasons. I'm willing to work with you on this. I'm going to give you an extra $150 a month off the rent. But in return for that, I need for you to promise that the property is going to be reasonably well kept and that you're not going to deny access to buyers that want to see it, so long as I provide you with 24-hour notice. See, the biggest mistake that I think sometimes sellers or people in general make is that they give the tenant all of the control. If I'm a seller and I have a tenant in one of my properties and I need to sell it, as long as I provide that tenant with 24-hour notice and I put some realistic and reasonable guidelines in place, I don't think that the tenant needs to be forced to show the property at 7:30 on Saturday night.
Right.
But if we provide the tenant with 24-hour notice, I want that tenant to cooperate. If the tenant has the right to accept or decline or reschedule showings after that 24-hour period, guess what? The majority of the time, they're just going to decline the showing. They're going to say, sorry, it's not a good time.
Yeah.
So if you're a seller, you need to notify the tenant. You also need to understand, this goes for both sellers and buyers, that their lease stands. It conveys with the property unless you have language in your lease that states that there's some sort of clause stating that if the property is to be sold and the tenant is provided with notice, that they have 30 days or 60 days or however long to vacate the property. There might be a penalty to the... So here's a common example. There might be a penalty to the tenant to cancel their lease early. Let's say it's a 2-month penalty. The same would apply if you decide to sell the property. You might have to pay the tenant 2 months in order to sell the property so that they can pay for moving expenses and the inconvenience of having to move. Mm-hmm. Who in their right mind would like to move? Nobody.
I think that's an important takeaway as a landlord, because you can, if you are thinking about selling a property or only holding on to it for a certain amount of time, you can really impact your potential buying pool by the way that that lease or that tenant is structured. For example, if you're trying to sell halfway through a lease and you don't have some kind of out, people are not going to be able to buy that property as a primary residence, because from the lending standpoint, you have to be able to take ownership of that property within 60 days of closing. Mm-hmm. So if that lease is not going to allow for that, the only person that could buy that home would be a potential investor. And so now you've only got investors looking for your house rather than the massive millennial pool we were talking about earlier who are buying places as their primary residence.
That's a great point. Well, I tell you what, guys, we're out of time, but I really appreciate you coming into the studio, sharing some of your stories with me, and providing the public with information. That's what we do here in this program.
Always a pleasure, Brian. Thank you
so much.
So thank you, Andrew Muller with Mappus Insurance and Bill Sandvig with Movement Mortgage. I'm Brian Beatty, and if there's anything we can do for you, feel free to get in touch with me. I'll put you in touch with the right person. Listingsincharleston.com is my website, and this is the Brian Beatty Real Estate Show. Have a great weekend.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Contact Brian Beatty online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. 843-345-1273.